Hi, welcome to the Market Alert for Tuesday, the 29th of November 2016. So yesterday, an interesting day actually, and news change yesterday. Let me just deal with this first. We had in the Market Alert yesterday, ECB, 3 p.m, Draghi was going to speak, and then this got changed later on in the day to 2 p.m. and then also putting in a second appearance at 4 p.m. Now the note I sent out, I put 5 p.m, and that was because on one of my other computers I hadn't accounted for the clocks going back. But that aside, it didn't affect the trading. It was interesting to see that they wheeled him out twice yesterday after originally he was only going to speak at 3 p.m. So on the charts, we've got a situation where he didn't speak before, he spoke at 3 p.m, and the first trade was at 15.05, which is why we had this small spike to the upside, and hence why it wasn't reported in the note that I sent out later on. And after 20 minutes of him waffling as usual, we then had a sell signal come in at 15.40, which was the winning trade, and that's when I sent a note out to say that the market had become sideways. And then at 16.25 we had a potential buy signal, but of course at 16.25 Draghi was still speaking. Now I've never seen this before where it's changed and we've had an ECB president come out and speak for a few minutes at 2 p.m. and then at 4 p.m. There's obviously something strategic about this, and that's the market's reaction to what he has to say. So give it in two small bites and hopefully the market will then move to the upside, and that's what it did on the first bit. Then whether he said something that was negative, the market dropped, and then they wheel him back out at 4 and he says something that obviously moves the market back to the upside, and then eventually the market moves down. Like I say, this is a first for me in 20 plus years of trading. Never seen that before, where the times have changed and also the frequency that a central banker would actually speak. It's most odd to say the least. So yesterday we had enough movement. You can see there all trades were winners because there was enough movement to actually drive prices. But first one I wasn't in, second one I was, third one I'd already decided to stand aside, even though the market went on to make a profit. Because of the confusion over whether he was actually going to come out and speak again or not. But if you did all three trades, then that was fine because the market gave a profit in all three, and then there was the one later on. But for me, it was only the short one in between the times that he was actually speaking there. In the daily charts, you can see the market was down for yesterday, and there's an increase in volume as well, which means that there was some selling around. It's going to be interesting to see how they're going to bring the market back to the upside. We are due for a major correction in this market. A good 20% pullback would be ideal, but whether we get it or not before the December the 14th central bank meeting with Yellen, who will then decide on whether she's going to put rates up or not, who knows. And news-wise today, well, Tuesdays are always difficult because the market absorbs everything into Monday's session. And of course you've got the holiday weekend also to take into account as well. So Tuesdays can be slightly difficult, but we do have Dudley speaking at 2:15 p.m, obviously 15 minutes before the market opens. And we've also got another one being wheeled out, Powell at 5:40. Got CB Consumer Confidence at 3 p.m. as well, and that's forecast to show an increase, and that would be bullish for the market. Anything to move the prices higher will be used. So 3 p.m. we do have a high impact news item. We'll see what happens in the first half an hour. You'll be able to see immediately, but at the moment the market's fairly quiet on the overnight. In the implied volatility, well, this has moved up from 1067 to 1149. That would be expected, as the market was down yesterday, but there's plenty of time for this to actually come back towards the 10% area. Again, for those of you that are new, we want to see the implied volatility head towards the 10% area, and then we get a far bigger move correction to the downside in the main market when we see this happen. And like I said yesterday, I'm working on this at the moment to put a video and some sort of manual together as well on it. But it's going to take a moment or two to actually do it. It took me 2 days just to put all of the charts together. But it'd be worth waiting for, because it goes back to 10 years of this pattern happening, and the accuracy is just absolutely stunning. And it always has been. First uncovered this, as most of you are aware, back in the 1990s, early 1990s, wrote articles in the CRB Trader and got invited to talk about this at the Futures Magazine conference in Orlando, Florida in March of 1998 as well. But more on this, like I say, we only touch on this briefly in the Market Alert, but it is extremely powerful. And once you get to grips with the whole concept of it, there is a video in the interim that is on YouTube. But once you get to grips with this, you'll see how much of a crystal ball it is in predicting how the market's going to react down the line. It doesn't go to the day, but it certainly gives you a very good indicator of what's coming down the line. And then you can use the price action to determine, fill in the gaps, as it were. Right, I've waffled on long enough. It's over 6 minutes, so let's try and keep them short for you. That's it for today. I'll let you know if I see anything, but it's Tuesday. We know what Tuesdays are like. They can be fairly quiet and sideways. Hopefully today this won't be the case, but just to give you the heads up in the event that it is. That's it from me. Thanks for your support, also for watching. See you in the next one.